Marketing always matters and we do it well. And everything is guaranteed, service over sales. Keep 100+ clients always satisfied. So call me Neo, what you need just to strategize. One eye on the market here to make you profit.
Alright, what's going on, guys? My name is David Haun, your favorite realtor's favorite realtor, and we are back for the market statistics for November 2022. We're going to be diving into this and talking about what's going on in the market, what we've seen heading into the holidays, and what we can expect going into 2023. So, let's dive right in. Average sale price dropped again to $365,618. You can see that it spiked up a little bit last month and fell right back down to where it was in September. So, the little bit of rebound that we saw there, probably not an indication that prices are going to start going back up. It's more of a bounce, as they call it in the stock market. And we're pretty much almost even with where we were a year ago. For the last year worth of these market videos, the year over year has looked fantastic. It's been like 10% plus. But when you look this month, a year ago we were $359,082. Now we're $6,000 higher. It's pretty darn close to what we would expect year over year in a typical real estate market, whereas during the pandemic we were seeing crazy growth. Looking at price per square foot, we are still holding at $215 per square foot. What this tells us is that the buyers who are buying homes aren't paying more for the home per square foot. They're just buying smaller homes, and that's kind of accounting for that drop in average sale price. That does, it does tell us a little bit about home affordability and what people can afford. Obviously, a lot of people aren't buying smaller homes on purpose. It's probably something that was more affordable for them and what they could manage with their household. New listings, we're currently looking at 247 for November. Again, another huge drop off, and this is actually an all-time low for the last 3 years. As you can see, this goes over the last 3 years, pretty much since the pandemic started. And we have new all-time lows for new listings. Activity has dropped off significantly, as it typically does during the holidays. You know what I mean? This is not abnormal. But what you can see is the drop started much sooner. We've been dropping for 5 or 6 months now, whereas during the typical holidays, you've got 1, 2, maybe 3 months of drop off before you start rebounding. So this is kind of a unique year in that we've seen a much faster and harder drop heading into 2023, and we might not be done yet. Now, if we compare to the past few years, the new listings, we're at 247 now. A year ago, it was 315, 319, 316. So you can see it's been very, very consistent over the past 3 years and is much lower now. So that kind of gives you an idea that this isn't, the drop-off is normal, but the level of reduction that we've seen in new listings is not normal. Homes for sale. We've got 580 homes for sale currently in Tulare County. That continues to drop off over the last 5 or 6 months. Inventory is a problem. The buyer activity is dropping off, which is, I'm not saying it's good, but it's good considering we don't really have the inventory to support them. Homes are still selling pretty quickly as long as they're priced properly. But you can see here, the inventory available is extremely low. We usually consider 6 months of inventory to be a buyer's market, and anything less than 5 or 6 months of inventory to be a seller's market. So we'll get into the actual inventory, months of inventory here in a minute, but that kind of gives you an idea of what we're going to be looking at. As far as pending sales, you've got 200 pending sales currently in Tulare County. Again, just a huge drop off throughout 2022 in buyer activity. And again, new all-time lows by quite a bit in pending sales. Comparing to the last few years, you had 291 back in 2019, 297 in 2020, and 300 in 2021, and dropping a third of that all the way to 200 heading into 2023. The number of closed sales is also dropping off. We are down 42% year over year in closed sales. Now that should tell you guys something as far as the activity. So in November of 2021, we had 326 closed sales. The previous year, 343. And in 2019, we had 329. Now we've dropped all the way to 189 closed sales in November of 2022. That's nearly half what we were looking at in previous years. So when you're hearing about real estate market activity dropping off, it is significantly dropping off. And honestly, this is probably the first video that we've shot where all the indicators agree that the market's slowing down. Average sale price hasn't taken a huge hit, partially because rents are still so high that it's actually more affordable to buy a home if you can than it is to pay somebody else's mortgage right now. But all the indicators are saying the market's going to slow down. And again, it's typical for this time of year, and there's a lot of other factors that are increasing. I do think we're going to see everything rebound in spring. How much will depend on the Fed and what kind of moves they make between now and then. Days on market. We're spiked up to 19 days on market, which tells you that homes are sitting on the market a little bit longer. Buyer activity has dropped off. And so a lot of sellers are still holding on to the prices that they have seen over the last year. The market just isn't there for it anymore. The buyers, the number of buyers has dropped off, so the urgency isn't there, and you don't get these multiple offer situations. You're not getting a whole lot of above asking price offers. We're seeing a much more normal market, just with lower activity than we would typically expect. So we talked a little bit earlier about months of inventory, how 5 to 6 months is typically where that line is between a buyer's market and a seller's market. In Tulare County, we are currently at 2 months of inventory. We've been holding there for the last few months pretty consistently and steadily, but that is up 33% from the previous year. So this time last year, we were way down here. Buyers were really struggling to be able to get into a home. You had 10, 20 offers on a lot of these listings when they came on the market. And now we're not having that issue. So why is this number holding steady even as we see pending sales and closed sales drop off? The answer to that is that it's based on a ratio. So this is basically taking your total number of homes for sale plus like the new listings that are coming in, and it's calculating those against the number of pending and closed sales. So it's your active sellers versus your active buyers. And as the new listings are dropping off, so are the pending and closed sales. And so it's kind of keeping this ratio consistent at that 2 months of inventory. In summary, after the average home sale price spiked in October, making up more than half of the losses that we'd seen since April, we saw home values fall again in November. Price per square foot is holding steady at $215 per square foot, suggesting that buyers purchasing smaller homes in November rather than paying more money for them per square foot. New listings continue to fall sharply in November. We have typically seen a slowdown going into the holidays, but there's much less activity this fall than we've seen in the past few years. Pending and closed sales have fallen to the lowest we've seen in the last 3 years. Our total inventory hasn't grown at all. It's holding steady at 2 months of inventory. And activity always falls off during the holidays. Plus, we've got the interest rate hikes and talks of recession. It's just a lot of things that are making folks nervous. But it's actually creating an opportunity for buyers coming into the market, an opportunity that they really haven't seen in the last few years. It's been really, really hard for buyers. So a year ago, buyers were paying tens of thousands of dollars above asking price. They're paying for their own closing costs and repairs. They're paying thousands more to cover a short appraisal sometimes. And that was all just to have a chance against the other 10, 12, 15 offers that were being put in on the home that they fell in love with. Now, buyers are able to negotiate a better price, they can get seller assistance with closing costs, and they can stop writing appraisal gaps. There really isn't the same competition out there on the homes that they want, and it's opening up a lot of opportunities for buyers. So we talk a lot about rates in this industry and how the Fed has been driving rates up and how that's making things more expensive for buyers. But if you're renting right now, you're paying 100% interest rates. So if you're able to buy a home, it's a good idea to buy a home. It's only going to be in your best interest. Right now, I think rent is higher than the average mortgage for the house of the same size. I mean, it's kind of crazy out there right now. Unfortunately, it's not really easy to qualify for loans. But if you can, it's definitely worth it to do it. And again, you can get a home right now at a better price than you could have a few years ago. Yes, rates are a little bit higher, but as inflation starts to come under control and rates start to come back down, you can refinance your rate and still keep that better than average sale price. Now for sellers, this is kind of a quick breakdown of where we are. Prices have held up as well as we could possibly expect, considering everything the Fed's been doing with interest rates in 2022, considering the current administration and coming out of the pandemic, and we just kind of have a perfect storm of things that have not been beneficial to the housing market. But here in Tulare County, fortunately, we've been pretty insulated from a lot of that. We're kind of a special market. We are one of the more desirable markets in California. We are definitely the most cost-effective market in California when you compare salaries and income to home affordability. So we get a lot of people here coming from the metro areas, your San Franciscos and your San Diegos and your Los Angeles. A lot of people come up here and settle in the Central Valley because it's much more affordable to live. If you purchased within the last year or two, you've probably got a lot of equity in your home. So this reduces the risk of a major wave of foreclosures causing a crash in home prices. A lot of people have fears after 2008 and 2009, but they don't realize how bad the loans were at that time. You know, we were giving out loans to anybody with $20 in their pocket. And, you know, a lot of those people weren't able to hold on to their homes when housing prices, started to collapse. And so the more people who foreclosed, the more housing prices collapse. You know, it was like a perfect cycle. So we created that with weak loans to begin with, and that's not a problem that we have now. And people have a lot more equity in their homes now than they did then. That said, the Fed is committed to stamping out inflation, and even with all these rate hikes, the positive impact to inflation so far has been pretty minimal. So I expect rate hikes to continue into 2023, and a lot of experts are actually saying they expect the actual recession to come in the middle of 2023. I think there's probably a 50-50 chance that that's true. We hear the current administration right now talking about a soft landing. Maybe there won't be a recession. Maybe. That would be fantastic. I don't think that's where I would put my money based on what I'm seeing right now. But either way, we can expect some more pain going forward. If you plan to sell your home within the next 2 years or so, I truly believe this is the best time for you to do so. Inventory is so low right now. New inventory is not really coming on the market. Homes priced properly are still selling quickly. So far, I've sold every listing I've listed this year, and I plan to continue that trend. And you can still make a nice stack of profit before things potentially get crazy. All right, guys, so I want to thank you for joining me again. This has been an enlightening video for sure. It's interesting to see all the criteria that we measure and all the data we measure actually agreeing with each other and not really conflicting in this video. It's not necessarily the things that we all want to see. We'd all love to see a strong housing market, but I think this is what we need to see. We need to see some pullback and some normalization in the market to allow buyers to get in and get some homes. So if you have any questions, give me a call. My number is 559-334-8971. It has been a pleasure. Thank you for joining us. I will see you next month. Take care.
David Haun, when they all falling short, pass me the baton. Can't handle your inquiries, a marathon.